Alright guys, welcome back to MMGinvest and WolfPack Cryptos. Let's talk about the stock market. So my last video, I said there was going to be a pullback on the stock market. I also said there was going to be a pullback in gold. I wasn't hoping, well, I wasn't thinking that gold would break below 1300, and it did. The stock market, it pulled back a little bit, but it hasn't corrected as I was anticipating, but I still think it's likely. First of all, this is not financial advice. I'm not your financial advisor. Consult your financial advisor. Stocks, equities, they're extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. Have your stops in place, emotions out, and once this video is uploaded, it's pretty much obsolete. So let's take a look at the Dow. We have a doji on the daily. Okay, so this is a daily chart of the Dow. Now we've had a massive rally. I mean, this is pretty much what a V-bottom looks like if you're new to trading. This is V-bottom. V-bottoms put in bottoms, right? And then they usually, you're going to expect more upside. It's complicated right now because the Fed capitulated, and that means higher inflation. But guess what? When there's high inflation, people like to crowd into stocks until the inflation really destroys the middle class. And then the stocks of companies start falling because companies start missing revenue, earnings reports. And that's like later in the next coming years or months. I'd say years. So everyone thinks the stock market has recovered. It's going to go to all-time highs. And it might. It might. But I'm not back in yet. I did buy this dip, and I rode it all the way up to this resistance, and I sold around here. I missed this entire rally right here, and that's fine. I was on vacation and everything. So am I going to jump back in and try to chase to the all-time high or higher? No, I'm not. Matter of fact, I expect a correction, a pullback, at least to 2,500 on the Dow. So for a better, I want to gauge this market a little bit better. So I want to look at the Russell 2000 because those are smaller companies and they're more, I think it's more of a leading indicator. Because smaller companies, they feel the pain before the larger companies. Especially with equities because, you know, everyone's retirement. Everyone crowds into these large 500 Fortune companies. And those indexes like the Dow and the S&P 500. Like the S&P 500 only has 500 companies in it, right? Well, the Russell 2000 has 2,000. So I think it's more telling of the real economy and the real market. I guess I would have to look at the bond market as well, but bonds are for like professionals. I'm not saying I can't read it. It's just the bonds are really tricky right now. Alright, so the Russell 2000, this is the weekly chart. On the weekly, we were on an 8 count. It's already starting to sell off. And a 9 count, it would, usually on the 9 count, we get a 1 to 4 candle pullback. Or past the 4 candle, that would indicate a correction. So on the Russell, I put in this triangle, right? I've got a Fibonacci from the all-time high to the bottom of the correction, and then there's I have this Fibonacci over here from the 2009 bottom. So you could say, you can start putting in some supports using these fibs. And I know a lot of people are like, oh, that's so basic. I don't care, it works. Yeah, once 38.2 is taken out, then you're in deep shit. All right, so I'm expecting a pullback, okay? Still on equities and stocks. At least to the 38.2, maybe even the 50. And 61.8 would actually make more sense. At the same time, though, on the Russell, if you look at the Russell here, I wouldn't be surprised if the price pulled all the way back to the bottom of this triangle to start making a triangle. Now, this triangle is premature. You want to have at least 1, 2, 3, 4 highs and lows to create a triangle. So this is, you could ignore the triangle for now. But another reason why the price did pull back is because I'm not the only one who drew this triangle. Traders have also drawn it. Well, and well, this would be creating the resistance up here to create the triangle. Let's take a look at the oscillators. By the way, this is weekly chart, long term. So here's another reason why I'm not jumping in to buy this. The RSI is extremely overbought. Momentum indicator is also in overbought territory. So I think it's too risky to buy in right now. I'm waiting for a pullback or a correction. Also, you can see the Ishimoku clouds turning red right here. So I'm expecting a red cloud to drop the price down into this area somewhere. And then we'll see where it goes from there. Now everyone was... So I have a MACD cross right here, and it did cross to the upside. That's bullish for the price. So let's see what happens next week or two. Next 2 weeks. We'll find out. The patience. You have to have patience. So if we get a 9 and then, or if it pulls back and then we break higher than the high of this candle on the Russell 2000, which is 1600. So once 1600 is taken out again, then yeah, it's going higher. It's going to test all-time highs. It'll probably go to all-time highs, pull back, and then go even higher and start making new all-time highs. But for now, this could be a giant bull trap. That's what I'm warning you about. I don't want to, you don't want to jump in the stock market and then this be a giant bull trap. If you look at previous bull traps right before like major corrections, here's 2009. Let's zoom in, see what that looked like. And, markets, they don't repeat, but they rhyme. So look at this. Here was the all-time high, right? This is weekly chart, just to remind you. Why does it do that? Alright, so here's the all-time high. It was at 855, the Russell 2000. And look at this rally. It looks so small. Let me zoom in. Alright, so we had a huge drop. And then we had like, I wouldn't say this is a V-bottom reversal, but close enough. I mean, this is a reversal pattern. And it turned into a giant bull trap. See? Boom. Reversal. Almost made it to the all-time highs. Almost made it back up to the all-time highs. And then started going back down. What is this called in Elliott wave theory? A, B, C. Alright, so... that's what I'm worried about. So I'm not jumping into the stock market. Not just that. I mean, when you zoom out, Look at this. This is about to be historically the longest bull rally market ever recorded. Look at that. There's one little red cloud right here. I remember this in 2016 because that's when my gold stocks like took off like a rocket, and I thought this was it. And every gold bug and bear thought this was it. And then the elections came up and Trump was running and people were starting to think he could win. And the market rallied a little bit and then Trump won. And then it went, here's when Trump won. And then boom, went into a huge bull market. So everyone thought this was it. This was the end of Obama's term. And the market was starting to correct, like this is it. The bubble's about to pop, and then Trump, you know, is running, and people are starting to get optimistic about that because he's a big businessman, and then boom. And, you know, he's making promises, tax cuts and whatnot, and so the stock market's starting to price that in right here. Trump actually wins. Huge green candle that week right here. So right before the election, everyone thought Trump was going to lose. So the stock market sold off. Trump wins. Huge green candle. And then we're in the bull market. Everything's already priced in. The tax cuts, everything that Trump's already done is already priced in. The only thing left is the trade talks with China. And you could say that that's already priced in with this giant rally because Trump's been tweeting about the trade deal nonstop to get the markets to rally. So, and the Fed capitulated. That's the real reason behind this rally. So, I say let's wait another week or two. See how far back this falls. Alright, let's go to gold. People are freaking out about gold. I was expecting a pullback, right? I had a 13 sell signal. I said it in my last video. And, you know, gold had a nice rally. This was beautiful. It's great. I took profits up in here, if you remember. And then, I was expecting a pullback. Now, I was hoping that the price would bounce off of the 1300 support. Now, here's the thing with support and resistance areas. And I call them areas, not lines, because they get broken all the time. They're constant. There's false breakouts, false breakdowns. The lines are not like, you know, it's never going to just bounce right off that 1300. It could blow through it and then bounce below it like at 1290 and then go straight back up above 1300. It's an area, okay? This is an entire area. I would say like this. This is neutral. This is a yellow rectangle. This entire area from 1280 to 1300 right now is neutral because we could still get a bounce and go back above 1300, especially if the market starts selling off. Right? So, we'll see. Sucks that the price fell below the green cloud. And of course the bankers smashed us. Believe me, they did. As long as the price can stay above 1280 or 1285, we still have a higher low. And then we're going to find out if gold could rally back above 1300 and take out its previous high for this year at 1350. If it could do that, then it's going to go test 1370, 1380 area, and there's resistance, a lot of resistance up in here. All right. But if it does do that, so if gold does do this, then we're going to get a massive rally in the gold mining stocks. And then you should go to MMGinvest.com. I'm going to plug myself and buy my research report. Also, tonight I'm probably going to make the the MMG Elite chat room go live. And everyone who purchased the research report, you'll get an invitation. You can come in. First month will be free, then it'll be like $10 a month. Because, you know, it takes a lot of my time and work and effort to, like, I have more mining stocks I'm researching that are like micro and small cap and juniors. And not just that. I mean, you know, I'll be talking about other stocks to possibly short, like Tesla. So, yeah, you guys will get an email from me soon, tomorrow probably, for the people who purchased MMGinvest research. Oh yeah, and when the price goes above 1380 gold, and then silver should be like above 25 or something at that point, then the price goes up to full price. Alright, so let's take a look at the oscillators on this daily chart. This is a daily chart of gold. RSI is oversold. MACD, I mean, it's telling me there's a buy signal. So I'm not freaking out. Now, if gold breaks below this previous low down here, below like 1270, it's not the end of the world. There's still support at like 1260, that area. And I don't think gold's going to go below it. Let's take a look at the weekly, the longer time frame on gold. Because look, actually this is positive now that I look at the weekly chart. So the price is dumping into these moving averages that are about to cross to the upside. So this is actually positive, because when the price goes into a golden cross like this, falls into it, it'll shoot it straight back up. So it's not the end. Although, I'm not going to lie, looking at the RSI, the MACD, it looks like, yeah, there's some downside and a decent pullback on gold. And there should be, because it's been overbought for quite some time. So it is dumping so fast. Alright, so as long as it doesn't really go below 1260, there's still a good chance that the price will recover and shoot back up. I'll keep you guys updated. Let's just look at the monthly, just to see what's going on the monthly. It's weird because on the monthly it had a 1, 2, 3 count to the upside. 4 is pulling back. So sometimes you do get the 4 pull back, and then you get a 5, 6, 7, 8, 9. You could go to a 9 count to the upside. But if this keeps falling, obviously the count's going to reset, the sequential. The ultimate support is at 1230. Looking at the monthly. So I could go back to 1230 and then go higher, which is sweet. It's more of a buying opportunity. Look at the RSI on the monthly. Extremely overbought. So we might see a few months of downside on gold. Unless there's a black swan event, like India and Pakistan going to war, and in Europe, banking sector really falling apart. Here's the deal though. You looking at this monthly, if you're a long-term investor, right? Which that's what gold is. It's like an insurance policy and a long-term investment. I mean, you could trade it, but why did it not work? I know there's a lot of drawings here and it's clustering it. It's not easy to see. Yeah, I don't want to see gold fall out of this triangle, which will take you right to this moving average. So 1230, it cannot fall below 1230. If it starts falling below 1230, then I don't know. Next stop would be $1,000. But I don't think it's going to do that. I think we might revisit 1230 in that area and then bounce. And we're going to bounce straight out of it and go into a bull market. That's what I believe will happen. It's just that it's going to take some time for the RSI to reset and go into oversold territory, and the MACD will likely just kind of go sideways here. Yeah. All right, let's take a look at everyone's FOMOing on this Friday into the stock market. That's how you know we might get a huge sell-off Monday or Tuesday. Also, the VIX, I mean, it's back to all-time lows again. If you trade the VIX, it's a short-term trade. You got to like do it the day of when stocks are falling. I suggest. Could be wrong, right? All right, so the dollar is the giant cup and handle. It's been trading sideways. Once it falls below 95, 95.5, then the dollar's in trouble. Although here's the thing, Europe is in trouble, so that's probably going to help the dollar. China's in big trouble, that's going to help the dollar. But the Fed is also capitulating, and they're going to blame it on global economic slowdown, and they're going to blame it on China and Europe. Which really, the Fed, well, I mean, they're all at fault. All the central banks around the world are at fault. So, there's many scenarios, and I covered them last video. Here's the thing, if the dollar strengthens, that doesn't mean it's strengthening against real things like energy, like oil and gold and physical goods and food. It's just strengthening against other currencies. So this dollar index is weighted against other currencies. It's not weighted against real things in the world, which that's what matters, because it's the cost of living that matters. And, you know, these Keynesians say the cost of living should be going up and up forever. I mean, that's ridiculous. In the end, everyone will spend money on food and gas, and they won't buy anything, and that would destroy the economy and all the businesses and their precious FANG stocks. Even though, if the Fed, and that was, like I said in my last video, I'm worried that the Fed's going to come in, print more money, and they're going to just buy the stock market, buy all these companies, prop them up, turn them into zombie companies and banks. Meanwhile, Main Street, and the reason that's horrible and immoral that they do that is because if they do that and they print money and they prop everything up, who pays for it? You do. The middle class does, and the poor. The poor will suffer too, because the cost of living will just keep rising and rising and rising. So will the baby boomers and elderly who, you know, live off of a fixed Ponzi scheme, Social Security, retirement, unless they had real big paying jobs and they have, you know. So that's what they're probably going to do. Because people, if they lose their 401ks and Roth IRAs, it's a big problem. Their pensions, those are going to, you know, you might get your pension check, but it's not going to be worth much. Same with Social Security, even though they say it's adjusted for inflation, but obviously they've been manipulating those numbers, and Shadow Stats obviously proves that, because they used to measure the CPI differently for the past few decades. Yeah, there might be a little bit of upside for the dollar. That's another reason why gold might pull back to like 1260, 1230. It's fine. It's just another buying opportunity, which is perfect. What else can I look at? Bonds. Let's look at bonds. Here's the daily. So this is the 10-year yield. It's getting a little bounce here. This is still a, you know what? This looks like a bear flag to me that's formed. If it pulls back, the yield to 2.6, somewhere around there. It's basically a bear flag, and then you could expect it to fall. Just looking at TA. Also, we had a very nice death cross right here on the daily for the 10-year interest rate. So if the 10-year falls and then the short-term yield rises, then we're going to get an inverted yield curve signaling a correction in the stock market and a recession. It's really going to be a hyperinflationary, like horrible stagflationary depression, but that's what's going to happen. That's what I'm thinking right now, just looking at this. Also, RSI overbought, MACD, everything's overbought on the oscillators for the yield on the 10-year. So the yield's going to go down and bonds are going to, I mean, the price of the bonds might go up. We'll see. I have to do more of an in-depth on bonds because it's like a whole different animal. It's not easy. Talked about palladium for a second. I still expect a correction. This is a weekly chart. Next week it'll be, I mean, we're already on a 9 count, so I expect a correction soon in palladium. What is this? Oh yeah, I want to look at Tesla. Let's look at Tesla. I just want to look at it. Yeah, it's selling off because the SEC is going after Elon Musk's tweets, which were pretty obvious. He was trying to get a short squeeze going. That's illegal. So I wouldn't short this until this area gets taken out. Although I could be wrong. This is not financial advice. I don't want to talk about individual stocks too much, but I mean, if the price falls until it makes a new low down here, takes out my blue line. This is a weekly chart, by the way. Yeah, that'd be great short. Let's take a look at the daily. Look at this volatility. Some people are trading this and making money. I have not been individually trading Tesla. Maybe I should start. I should probably start. But it's one of those stocks where there's so much hopium and so many like cultists, Tesla cultists behind it. They buy every dip, and it just makes it difficult. And a lot of shorts have been wrecked trying to short Tesla. This isn't even a pattern. What is this? This is crazy. Not easy to trade, but very volatile. You can make a lot. You could hedge. You could put on 2 positions. So in this range, right? This is learning how to trade. So let's say you short it up here, and then the price dropped, and then you put on a long position as well. And then when the long position goes up, you take profits, and then the price falls, and then you take profits on the short position. So you hedge your bets. You buy both sides. You go long and short at the same time. And on these huge swings, you take profits from the one, and then you take profits from another. That's how professionals trade. That would have been a great strategy for this entire range right here, because it's kind of range bound going sideways. So you just buy longs and shorts, and but you have to know what you're doing. You don't want to, obviously up here you would buy way more shorts than longs. So you would it depends how much weighted your positions are to how much money you would make. If you just put down 50-50, you could still get a margin call. Also, you wouldn't want to use margin on that. Or you could, but you better know what you're doing. So let's take a look at Europe. This is a daily chart. This is the European financials. We did get a higher low, so that's positive for the price, but look how weak this bounce is. This rebound. It's not really like rebounding. It's just looks like a dead cat bounce as of now. There is resistance up in this area, so that makes sense. So if the financials in Europe can't get past, can't get back up to like 20, up in the 20s, it could be in some serious trouble. It'll probably pull back and go sideways. I don't trade these European stocks, so I'm just speculating right now. I'm just talking. So we'll see how much trouble Europe's in, because you know, at least in the U.S. and the Fed, at least the Fed raised interest rates to like 2 point something basis points, 2.25 to 2.5, right? But Europe, the ECB and Draghi, they're like still at like almost negative. So there's like nothing they could do except helicopter QE money if their banking system just continues to deteriorate as it is. And the pigs, right? The Italians, Spain, and Greece, those southern European countries, I mean, they're in trouble, and I don't see an end to it, to be honest. And the Brexit thing, I haven't been following it. I just think that they're just going to drag it out until, I don't know, people start heading with the pitchforks or something. FTSE 100 weekly chart. See, here's what the FTSE's doing. So the European equities, it's already pulling back. So this was the Dow and the S&P, right? They fell just like the Dow and S&P, but look how much they're pulling back. They're already pulling back, and the S&P and Dow hasn't. See what I'm saying? These markets are global. By the way, you buy a 500 fortune company, you're buying a stock of a company that is international. It's a multinational company. So when things go bad, I don't know, around the world, it should affect that stock negatively. It doesn't matter if it's an American company. It's technically an international company. By the way, didn't Google and Apple like go to China? It's not even like an American company anymore. I don't know. Fact check me on that. Put it in the comment section. I just read and heard that they moved their headquarters, but it's still an American company. It's technically not then. So their money wouldn't even be coming back to the United States. I don't know. That's something someone should research. I'll try to research. It's just I don't have that much time. All right, guys. China's shadow debt reckoning finally arrived. China, I just posted that 60 Minutes video in the chat groups. Also, I need to make like an MMG newsroom where everyone can see everything I post, but there aren't too many posts in the MMGinvest chat room, which is free, and everyone could join it. But you know, there's a lot of stuff that we post in here. I did post that 60 Minutes, Australian 60 Minutes. Dude, those ghost cities are just... If you thought the housing bubble was bad in the U.S., it dwarfs what they're doing in China. What they're doing in China is insane. It's... No one's buying any of the real estate because everyone's poor in China still. It's madness. When this thing pops... I don't know what's going to happen to China, but I also know that they're going to take down the world. They're going to take down the Australian economy with them as well, because the Australian economy is pretty much dependent on China's demand, because Australia has been supplying China. So if you're an Aussie, when China goes, Australia is going to suffer, and Australia's housing market, I think, has pretty much popped as well. All right, guys, I don't want to make this too long. Let me know what you guys want me to talk about when it comes to stock market, economy. Put it in the comment section. I put these new like interactive animations on the bottom. So you guys don't forget to subscribe, hit that bell, like, and share my videos. Alright guys, until next time.